Silver just crashed from $82.60 to $74 in a matter of hours. That's a 10% drop. And global markets are in absolute panic mode. This isn't just about China's margin hike anymore. This is about something much bigger. President Trump just passed legislation giving him authority to impose tariffs up to 500% on any country he chooses. The entire commodities market is freaking out. Stock futures are bleeding red. And silver? Silver is getting absolutely destroyed. If you're holding silver, if you're trading futures, or if you just want to understand why financial markets are suddenly imploding, the next 10 minutes could save or make you a fortune. Hit subscribe right now because we're watching history unfold in real time, and this is just the beginning. Let me give you the timeline of destruction. January 7th, 2026. China's Shanghai Futures Exchange announces emergency margin hike to 18%. Silver in China drops to $80. January 8th, 2026, today. Silver was trading at $82.60 this morning. As I'm recording this, it's at $74. That's $8.60 per ounce lost in hours. Let me put this in perspective. If you owned 1,000 ounces of silver this morning, you just lost $8,600 in value. If you were leveraged 5-to-1 on futures contracts, you just got wiped out. What triggered this acceleration? 3 catalysts hit at once. Catalyst number 1. China's margin hike takes effect. January 9th settlement, that's tomorrow, is when the 18% margin requirement officially kicks in. Traders who were hoping for a reversal realized it's not coming. Panic selling accelerated. Catalyst number 2, Trump's tariff authority. Breaking news. President Trump just secured congressional authorization to impose tariffs of up to 500% on any nation deemed to be engaging in unfair trade practices. Let me repeat that, 500%. This isn't a negotiating tactic, this is economic warfare. And markets are pricing in the worst-case scenario: global trade collapse, retaliatory tariffs, supply chain disruption, and stagflation. Catalyst number 3, contagion fear. When one market crashes, traders ask, what else is about to break? They start selling everything: silver, gold, copper, stocks. It all goes down together. It's a liquidity panic. Right now, we're seeing forced liquidation on a scale we haven't witnessed since the 2020 COVID crash. Let's talk about the elephant in the room: Trump's 500% tariff authority. Here's what we know. The legislation grants the president discretionary power to impose tariffs ranging from 0% to 500% on goods from countries determined to be engaging in currency manipulation, violating trade agreements, threatening U.S. national security, or causing significant trade deficits. Why this is devastating for silver. Reason number 1, China is the world's largest silver consumer. China accounts for roughly 15 to 20% of global silver demand, primarily for solar panels, electronics, and industrial applications. If Trump slaps massive tariffs on Chinese goods, China's industrial production could slow dramatically. Less production equals less silver demand equals lower prices. Reason number 2, retaliatory tariffs. China won't sit quietly. They'll retaliate with their own tariffs on US goods. This creates a feedback loop of economic destruction. Global trade slows. Industrial metals get crushed. Silver is caught in the crossfire. Reason number 3, dollar strength. Ironically, when trade wars escalate, the US dollar often strengthens as a safe haven. A stronger dollar makes commodities like silver, which are priced in dollars, more expensive for international buyers. This suppresses demand and prices. Reason number 4, risk-off environment. In extreme fear environments, investors flee to the ultimate safe haven: US Treasury bonds and cash. Even gold and silver, traditional safe havens, get sold as traders raise cash to meet margin calls or prepare for uncertainty. The markets fear. Traders aren't just worried about tariffs themselves, they're worried about a global recession triggered by collapsing trade. Central banks forced to choose between fighting inflation and supporting growth. Supply chain disruptions, making inflation worse, even as demand collapses. That's the stagflation nightmare. And geopolitical retaliation beyond just trade. Think energy, technology, rare earths. This is a powder keg, and silver just became collateral damage. Let's look at what's happening on the charts and in trading accounts right now. Technical breakdown. Silver broke through multiple critical support levels. $80 support, shattered. $78 support, gone. $75 support, currently fighting to hold. If $74 doesn't hold, the next major support is around $70, then $65. Technical traders are getting stopped out at every level, accelerating the decline. The margin call death spiral. Here's how margin calls create a cascade. Silver drops 5%. Traders on 10-to-1 leverage are now underwater. Brokers issue margin calls. Deposit more cash, or we liquidate your position. Traders can't or won't deposit. Forced liquidation begins. Forced selling pushes prices down another 3%. This triggers more margin calls on other traders. Repeat until everyone leveraged is wiped out. We're in step 4 or 5 right now. Now the question is, how much further does this spiral go? Who's getting destroyed? Retail traders on platforms like Robinhood, TD, Ameritrade, interactive brokers, hedge funds with leveraged commodity exposure, mining companies whose stock prices are crashing even faster than silver. Some are down 15 to 20% today. ETFs like SLV seeing massive outflows as panicked investors sell. Who's potentially buying? Long-term physical holders waiting for lower prices. Industrial users hedging future needs. Contrarian investors betting this is an overreaction. Central banks? Unlikely in the short term, but possible. Let me give you the scenarios playing out over the next 24 to 72 hours. Scenario 1, the capitulation flush, 50% probability. Selling accelerates. Silver hits $70, maybe $65 in the next 24 to 48 hours. Miners are down 25 to 30%. Total panic. But then it stops. Buyers emerge. Physical premiums spike to 25 to 30% over spot as people realize paper is disconnected from reality. Prices stabilize and begin recovering by next week. Scenario 2, the grinding decline, 30% probability. No immediate crash to 65, but steady bleeding. Silver drops to 72, bounces to 76, drops to 70, bounces to 73. Death by 1,000 cuts over the next 2 to 3 weeks. Traders lose hope. Volume dries up. Market enters a depressed state for months. Scenario 3, the snapback rally, 15% probability. Sometime in the next 48 hours, a major buyer steps in. Maybe it's China's government supporting their market. Maybe it's a sovereign wealth fund. Maybe it's industrial users, panic buying physical. Price rockets from 74 to 82 in hours, trapping shorts and creating a massive short squeeze. Scenario 4, the systemic break, 5% probability. Something in the financial system breaks. A major trading firm or bank fails. Counterparty risk explodes, markets freeze. Circuit breakers trigger. This becomes not just about silver, but about systemic financial stability. Governments and central banks forced to intervene. Critical indicators to watch, the $70 level. If we break below $70, psychological damage is severe. Physical premiums. Are silver eagles trading at $90 when spot is 74? That's divergence. Gold-silver ratio, currently spiking, which indicates silver weakness relative to gold. Mining stocks. If they start recovering before silver, it's a bullish divergence. Trump's next move. Any clarification or walk back on tariffs could trigger instant relief rally. All right, enough analysis. Here's your action plan. If you're holding leveraged positions, assess your risk immediately. Can you survive silver at $65? If not, de-risk now. Don't try to be a hero. More fortunes are lost trying to catch falling knives than any other trading mistake. Set hard stop losses. If you stay in, know exactly where you'll exit. If you're holding physical silver, do not panic sell. You have no margin calls. You can wait this out. Check local dealer buy prices. Sometimes dealer premiums hold up even when spot crashes. Remember your thesis. Did you buy silver for 2-week price moves or long-term wealth preservation? If you're thinking of buying, wait, don't catch this falling knife yet. Let capitulation complete. Watch for signs of bottoming, positive divergences, volume spikes on up days, stabilization. Scale in gradually if you do buy. Don't go all in at once. If you're not in silver, learn from this. This is what leverage and concentrated positions can do to you. Watch other markets. If silver is doing this, what else is vulnerable? The brutal truth. Markets don't care about your feelings. They don't care if you deserve to win. They don't care if you are right about the long-term thesis. Right now, the market is saying, liquidate or die. And the only rational response is, protect yourself first, profit second. Silver has crashed from $82.60 to $74. A 10% collapse driven by China's 18% margin hike and Trump's shocking 500% tariff authority. Markets are in panic, traders are getting liquidated, and we might not be done yet. This could be the beginning of a deeper correction to $70 or even $65, or it could be the final flush before a major rally. Nobody knows for certain. What we do know, leverage kills, paper markets are manipulated, physical and paper can diverge dramatically. Panic creates both danger and opportunity. The next 48 hours are critical. Stay alert, manage your risk, and whatever you do, don't let emotion override logic. If this emergency update helped you navigate this chaos, smash that like button, share this with anyone in silver or trading, and subscribe because this situation is evolving by the hour. Drop a comment. Did you get caught in this crash? Are you buying the dip or staying away? Stay safe out there. This is just the beginning.